It's Sunday evening, December 6th, and I'm trying to get myself ready for the next week of trading. Hello, traders. Taking a look at the market. You hear me preach this time and time again. Market first, market first, market first. This is going to be a pretty short video tonight. I am looking for a market pullback in here. I'm not looking for a huge market sell-off. No, this is not a time to buy puts. We are selling out of the money bullish put spreads. That's the best strategy for this market environment right now. We've got a lot of positions on. They're all doing great, but I feel that we're going to have a better entry level for new bullish put spreads, perhaps by the end of this week. So here's what's got me a little bit cautious on the market. I decided to take a screenshot, otherwise my main chart would get a little bit messy, but I wanted to show you a few things. So this is a high point right here. We're going to connect the tops and draw an upward sloping trend line, and you can see how we've poked through it. That's nice. This is not a huge upward sloping trend line, but it appears that the market is a little bit overextended. On a shorter term basis, I'm connecting these tops right in here, and you can see that again, it's a little bit overextended. Now, the market has had a pattern over the course of the last few weeks of 3 steps forward, 2 steps backwards, 3 steps forward, 2 steps backwards. Well, we've just taken 3 steps forward and we haven't had the 2 steps backwards. And I believe that we're going to pull back perhaps to this upward sloping trend line. I believe that SPY 360 is definitely in range for us. Now you might think, well, SPY 360, that's nothing. Actually, that's close to 100 S&P points. And when stocks start to get ahead of themselves, you'd be surprised how much fluff can be taken out of them. The advantage of waiting is twofold. Number one, we aren't having to manage positions that are moving against us. And right now, the VIX is super, super low because the market's just been floating higher. And implied volatilities are really collapsing. And what that means is that for out of the money put sellers, we have to go closer and closer to the money because there's not a lot of premium in them. That also means that when the stock does pull back, all of a sudden these spreads are in the money. So we want to be very, very patient. Again, market first, market first, market first. So I'm expecting this pullback, and once we get it, we have another advantage. We're able to enter the trades at a better price, but we are also able to monitor relative strength during this pullback. And when we get that pullback and we see stocks that are treading water or even in some cases moving higher, then we know we've got the real deal and that those are the best stocks to be selling out of the money bullish put spreads on because they will continue to grind higher. Now, it's also possible that maybe this support level doesn't hold and we get a pullback in the market and we break that upward sloping trend line. Well, then we'll be very happy that we're not adding new trades right now because then our existing positions that we have on right now, we're going to have to address, we're going to have to manage. Now, we've had a lot of time decay in those. We're keeping all of our trades inside of a 3-week window. So we've got some nice winning positions on right now that are going to expire this next Friday and the Friday after that. I think we're going to be in great shape in terms of trying to manage those positions. But that's why I'm a little bit cautious right now. I'm going to take this chart down and I'm going to show you a few other things that have me leaning to the cautious side right now. You can see here that we've got a number of what I call doji bars. This means that there's equilibrium in the marketplace and that buyers and sellers are paired off. So the market closes very close to where it opened. And you've got a doji there, 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 there. So in the last week and a half of trading days, we've got about 5 of those. That tells me that the upward momentum is going to be very, very slow. The other thing that you'll notice is that I've got a Bollinger Band set up here, and this is on a 14-day basis, and you can see how every time we've come up to the upper portion of that Bollinger Band, and this is a classic example of being a bullish climax, and we avoided this one very nicely when we broke up to the upside here. We had already stopped putting bullish put spreads on back in here. We had the market pullback. All the spreads that we had on expired worthless. That was nice. Dodged a bullet. We let the market come in. We had this downward sloping trend line that was breached to the upside. Now we're riding the lower end of that Bollinger Band. This is where we started to put a lot of bullish put spreads on. We've been able to navigate this market volatility very, very successfully by really keeping our trades low when we sense that the market is getting overextended. That's what I feel is happening right now. So as we get to the upper end of that Bollinger Band, that's when we start getting into trouble. There, 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 there. So I'm looking for a pullback to that SPY 360 level. Then I'll feel more comfortable once I see that support established to take new positions. Light volume rallies are also problematic. And you can see how the blue line here, this measures the 20-day average volume on the SPY, we're below that average. And you can see that there were a couple of really soft days in here where there's not a lot going on. Asset managers are not going to be chasing the market right now when it's at an all-time high. They are going to be buyers on any type of pullback. So the video tonight is going to be relatively short because I am not going to suggest adding to positions right now. And we've got, like I said, 7 really nice bullish put spreads on right now. We're able to get NVIDIA done last week. We've got an Etsy spread on. We have a Cisco spread. We have a BABA spread that's a little bit problematic. We've got a bid out there to try and scratch that trade right now. I did not like the price action, and I think we'll be able to do so. These are some of the other spreads that we have on. WKHS, that one expired worthless for us last week. That was a nice winner. We've got a naked put right on Candy. We've got a nice bullish put spread on Hilton. So we've got plenty of open positions right now. We're generating income while the market is floating higher, but we're keeping our distance because of this 3 steps forward, 2 steps backward process. So I know some of you might be a little bit disappointed in tonight's video because there's not a new pick. I try and put a good pick out, but I'm not just going to be throwing picks out there when I don't feel that market conditions warrant it. And this is perhaps one of the most important lessons because when I talk to traders, they are oblivious to what's going on in the market. They zero in on the stock. They love the stock and they just plunge forward without any regard to what the backdrop is. So I hope that this helps you throttle back your positions, throttle back your enthusiasm, be patient. Let's wait for that pullback to that 360 level. Let's make sure that it holds. And then let's go out and find some stocks with relative strength and see if we can put on another round of trades to take us into year end. Thanks so much. I hope you enjoyed this content. If you did, please give it a thumbs up. Let me know that you like it. Also, make sure to subscribe to my YouTube channel and turn on your notifications so that you never miss these videos. I normally have lots of great trading ideas in them. Thank you. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.